afternoon, everyone. I'm Christine Beech, and I have the pleasure of representing the E1 and moderating this session today. The E1 is a collaboration of entrepreneurial support organizations throughout Southeast Minnesota. We're funded by the state under the Deeds Launch Minnesota program. And the idea is for us to support our local entrepreneurs. So today, as part of our programming, we're pleased to bring you the story of a Minnesota tech company that started just 7 years ago and has already garnered quite a bit of attention and several accolades from national organizations. We have Scott Schwalbe with us to share the Nimbelink story. As co-founder and CEO of Nimbelink, Scott has a long history of building profitable businesses and successful teams. In his role there, he is responsible for corporate vision, strategy, and the overall leadership of the company. Founded in 2013, Nimbelink was recognized in 2018, so just 5 short years later, as one of Deloitte's 2018 Technology Fast 500. And this year, Inc. magazine placed Nimbelink at number 77 on its inaugural Inc. 5000 series Midwest list, the most prestigious ranking of the fastest growing private companies in the Midwest. Prior to founding Nimbelink, Scott held leadership roles for several industry-leading companies, including Logic PD, HDM, and Celestica. He also served and retired after 20 years in the U.S. Navy as a cryptologic linguist. Welcome, Scott.
Well, thanks, Christine. Good to be here.
So today we're going to talk a little bit about the company and kind of what is going on with the firm and how you got to where you are. But let's start by getting to know you a bit. What led to your personal transition from corporate leadership roles to making the entrepreneurial leap?
Yeah, that's a great question. Initially, I'd say I'm the reluctant entrepreneur as we were going through. But in reality, I had dabbled in entrepreneur endeavors throughout, even while I was in the Navy. So I always had an interest to do something, do something on the side, figure out what to do. But at my last period of time, my last company. In each company, you're creating value, you're doing things, you're seeing, you're learning more, and it finally came to the point where it was just time to take control, to be in charge, to actually drive some of our own ideas. And my partner and I had some good engagement with the market, understood some things, and we actually tried to be entrepreneurs. We tried to launch our thoughts and products within our company, and they just really weren't interested. So we tried that first and decided to step out and start Nimbelink.
So you both worked for the same company before? We
did, yeah. So we were working together, and we actually were very open about some of the things that we were working on, and saw some market need. And saw some great opportunities in the market, and decided that we would try to launch a product. And we tried to launch it within the company, and we couldn't get the backing and the interest, and we actually were very open and got their approval to take. It was ideas that really weren't in competition with the company, so it wasn't like we snuck off and did it. So it was very much in the open, deciding to go do this, because it was a little different avenue, so I can understand why they didn't want to do it.
Right. So, well, tell us about this idea that launched Nimbelink.
Yeah. So back in 2013, it's interesting as we look at the technology from cellular. We were still just at the end of the 2G network, even just 7 years ago, and you think. Now the big hype around the 5th generation, 5G. So we went from 2 to 3 to 4. But back machine-to-machine communications, and machines talking to each other, and really creating the ability for a way for machines to quickly connect that weren't necessarily connected with cellular right away, to create some hardware that could integrate and wrapping that machine-to-machine connectivity. And our first product, I actually had worked with a group that had a little product called the Text Alert. It was a little box that had the ability to send a text message if the temperature went out of range, or if there was some motion, or if we lost power. So we were really, that was our first initial product to launch into the marketplace. Just simple text alerting if you lose power.
Oh, neat.
Yeah.
And so is that still in the market or no?
It's not. There's plenty of products like that in the market. Our current product is not in the market anymore. We ended up moving more towards down into the module components of what goes inside that product, and really drove to pivot it a little bit. In 13, it's interesting. We actually we applied for the Minnesota Cup competition in 2013, and we didn't make the finalists, but that whole process was just an awesome process to focus on our business plan. And maybe we can talk about that at some point, some of those different opportunities within Minnesota here.
So you kind of touched on a little bit, but tech is always evolving and changing. So how are you making the decision when you want to drop a product out of production or start a new one?
Sure. So in some cases, you're just forced. So when especially on cellular, as we're working with the networks, when the cellular carriers came out and said, we are just going to shut down the towers and no longer support a technology, that probably makes for a pretty easy decision. Well, not easy, but yeah, we move it. But as we evolve and look, it's so important to be connected with the market, with your customers. We found, initially we were driven, because if you get too driven just by the technology, you can get caught going down an avenue of being too early, building something that's just not quite ready. But if you've got one ear to the ground, listening to the market and talking to the customers, and the other one looking at the forward technologies, it's that balance act of determining when to launch a product. So we while we're small yet, and we're still driving, and we got a pretty small team, we're trying to pull in that market intelligence and listen to the customer, because and then a typical, while it might be streamlined, a market requirements document to a products requirements document to then to drive through the new product introduction process and be agile. I mean, we've launched some products that we weren't quite sure, and we launched them as fast as we could to get them out in the market and start getting them tested. So we're trying to use that methodology also.
So as you're talking about launching different product lines and growing quite a bit over these last 7 years, can you talk to us a little bit about, some of the challenges you faced, and if there were times where the ecosystem somehow helped you, what were those?
Sure. So I think growing a small business, capital is something that's always important as you're building that. And then the second thing is getting the right people in the right seats and moving forward, and then that balance. So through the years, there's definitely been times when we've needed funding, or we just wanted to do something, and in order to hire, we needed funding. So that's always it seems like it's always ongoing as far as continuing to be engaged with the community of investors or potential investors, if you're going to grow could continue to grow. And we were fortunate, we had a network of people that we've worked with in the Minneapolis and Rochester area. So finding the right people to get to this level has not been as much of a challenge. But you mentioned the ecosystem. I mentioned earlier, we applied for the Minnesota Cup competition. That process automatically ties into the Midwest, especially the Minneapolis community of potential investors. You get a mentor, and they help you with your business plan. So early on, while there's only a couple of us in the business, that's a great avenue. And then the Minnesota Angel Tax Credit was available, and so we took advantage of the Minnesota Angel Tax Credit for some of our, our early stage funding in 2014 and 15. And that was, and I think that was really a trigger point that pushed some of the investors, to saying yes, because the fact that they got it, they were able to get a tax credit, from the state. We didn't, in the ecosystem of angel investors, we didn't really find a lot of support in the Minnesota area for that. It's coming, with a tech hardware company. It's not as sexy as medical or as software as a service or some of the other, you get into certain areas and pockets, medical, it seems, is where a lot of the money's going and driving to. And then, like I said, software as a service, something that's software related is the focus. So we had to go outside of the Minnesota area to get more institutional funding in later on in 2016. But yeah, go ahead.
Do you think that's changing at all? That we're seeing more venture capital enter into the state?
I think there might be more money coming in, but I still think it's very focused in in medical and in some specific software. So I see you're seeing more ag maybe. There's definitely some interest in ag, and I have not been real close to it in the last 24 months or so, but I don't see a lot of the money coming in, from a hardware, specific, tech, depending on, there's the Internet of Things, IoT, which we're in the middle of, depending on which part of the stack you're in, if in analytics or in, from the sensor, the money is more focused on more of the analytics, the big data, the recurring, which we touch all those, but that's not our core focus. It makes it a little more difficult.
Yeah. So what's been the most exciting thing as you've kind of grown through this growth spurt?
Yeah. So one was obviously we went from, my partner Kurt and I, and now we have roughly 24, 25 employees. So growing the Nimbelink family in the business, being able to bring good people into the business has been exciting, been fun, and being able to do that. Obviously, we're very very blessed with a lot of really good customers. Get to good relationships that we've built along the way. I was talking to somebody actually earlier today about culture and vision, and it's the relationships. It's just it's so important to continue to build those, and so we're building really good relationships. I think the one big surprising thing that probably 2 years ago really kind of shocked me is that people knew us from all around the United States. It's especially in today's world, if you do the right digital marketing, you go to the trade shows, and you get into the market, you can create a brand very quickly and create a large brand and get recognition. And you're thinking, we're just small little company here in Minnesota. And then you start showing up at trade shows and start talking to people. Oh yeah, we've heard of you. So that's always exciting to know, to see those types of things. So it's been fun to get the recognitions like you had mentioned earlier for the company, and just and seeing the ability to grow and create a business has been a challenge, but fun at the same time.
I would think so. If you go somewhere else and they know who you are, that's pretty
Yeah.
cool. Right?
Yeah.
So getting those accolades that we mentioned earlier on, did that help, do you think, with your raising of capital?
So the accolades didn't come until after raising of capital,
Okay.
but it doesn't mean that it might not help going forward. what I found is that the acolytes probably helped more in getting customers in business development, because if we're talking to a Fortune 500 company or Fortune 100, or we're talking to larger corporate, and they see recognition by, you know, Inc. 5000 or Deloitte or the Fast 50 or some of these things in Minnesota, it actually builds some credibility. We won the Minnesota High Tech Techni Award a few years ago for IoT. So some of those things are really helpful to from the business development. But then the other aspect is really interesting. Now we were just recognized third year in a row on the Inc. 5000, Fast 5000, and even before we announce it, I probably have 20 to 30 new friends trying to sell me a service. So there's definitely groups watching that. And so I think, right now it's been more of a, not early on at the first time you do those things for that very reason, to create credibility, to create brand. So they're important early on. Now I'm not sure the importance to, because ultimately to raise money now, they're going to first thing, all right, let's look at the income statement, the balance sheet, and that award's nice, but let's dive deep.
Right. Yeah. No, that makes a lot of sense. So when a lot of the people who are accessing our resources are trying to launch a tech company, or they're in the beginning stages of launching a tech company, so what kind of advice would you give them?
Yeah. And maybe, and it's probably, obviously tech companies and any company is probably some of the similar advice, but very specifically, to a tech company. Obviously, I think there's lots of great resources right now. If in Minnesota with accelerators and with boot camps and like I said, the Minnesota Cup, get connected with people that have done it, because there's a lot of just people that want to help. They're offering assistance to create your business plan, to create your financial plan, to create your network. So I would say that would be probably the number one is, don't be afraid to ask for help and seek help. People, I think the initial thinking is like, everybody wants to take a piece of my business, or they all want equity. So I got to share, I got to keep this to myself. But there's a ton of resources out there that aren't looking to take your equity and trying to get money. And so I think take advantage of some of those. And even if they are wanting to take a little bit of equity, it's probably well worth it if you've never done it before. And I think the other key area is to find somebody that's been in a similar market that you're going into, somebody that understands the channels, understands the where to sell to, understands your target market, understands how to position your company. Look for that type of help if you don't have it already. I think that's really key. And I think the other area is there's no way that I would have succeeded at Nimbelink by myself. Having a co-founder has just been, with my partner Kurt, he's really focused on the technology, and he's got a great business mind and a great with customers. And then I'm more in the business development, finance, and we came together and we had complementary skills that allowed us to do this, because every day we had somebody to bounce off of and to support and to build up. So I think for me personally, that worked very well. So we all have strengths and we all have weaknesses, and I think identifying those and not being afraid to find somebody to complement, because I've actually been I've witnessed businesses, very good technology, very strong product, and there was just a lot of pride around the single owner, and he would not let people in to help drive the business, and the business is not growing the way it could or it should. So I think allowing others to come in and help and drive the business would be another area. Don't be afraid to hire the right people once you get that funding, or once you figure out how to do that. And then the other, back to the funding, I'd say bootstrap as long as you can, because the longer you can, the more traction you can make, getting a prototype, getting your product at least in front of some customers, getting some good customer feedback, getting your business model tweaked a little bit so that you can actually have financials that have some backing of market intelligence or a couple communications. And obviously, if you could sell something, that would even be awesome. But trying to get some of that traction, because the more traction you have when you do go out and raise money, typically it's going to be easier, and the less equity you're going to get, give up of your company along the way. I think realize that if you are in a business that is going to raise money and you're going to grow that, you're probably going to have to raise money 2 or 3 or 4 times, different times. So don't give away all your equity the first time, and try to maintain, control, of the company, and really think through. All money is not created equal. Depending on, really do. I'll tell you that the investors respect the fact that you're interviewing them also, so you don't have to feel like you're just being you have the right to say yes or no, and while it doesn't feel like it's like, oh my gosh, I need this money, I want, but at the same time, I really think a lot about that, because that's a partner you're getting, and it's a lifetime partner, or until you do some transactions. I think it's another area. So I don't know. I jumped around quite a bit, but
that's all good advice, right? I want to circle back. So earlier this week, I was on a virtual class call that Collider was hosting, and Chris Lukenbill, who runs Sherpa, was on talking about his company, and he was talking about the value of a co-founder, and he was addressing the fact that your co-founder is kind of like your spouse, your work spouse, right? And that you have to have the right relationship. They have to be able to have a give and take. So what kinds of conversations did you guys have in order to figure out that you should be partners in this and found together? And how do you decide whether someone is a co-founder or someone you hire?
Sure. So I think I mentioned early on, Kurt and I did work together. So we did know each other a little bit there. But again, he didn't work for me, and I didn't work for him, and we were in 2 different parts of the group, so we didn't know each other that well. So once we decided to do this and just started to get to know each other a little better, it's typical, like you said, it's relationship. Can I work with this person? Am I going to be able to? Do I trust them? Do I? Is this somebody that does what they say they're going to do? So kind of living the same value, and what's their reputation? Do they have the skills to do the work? And then I think the key then, is communication. Through the process, we implemented early on the entrepreneurial operating system, and in there's they talk about having communication between the visionary and the integrator, or the co-founders, the people working together quite often. And sometimes you get so busy, and Kurt and I don't have them as often as we should sometimes, but we're 7 years into this, and we totally trust each other now, and the relationship's as good now as it was back then. So it's your question about founder or hire. I think it's really around the risk of, what does the both partners want. If you've got an individual that's very good and wants to be part of something, but they're not willing to take the risk of maybe not getting paid for a year, or or they don't want to take the risk of of, of just throwing it all in. Then you might consider hiring. I think that's kind of some of the trade-offs, because ultimately there's not a lot of money at the beginning, and if your partner is willing to take some of that risk with you, then it's only fair that if they're taking the risk, that they would actually be part owner and co-found. So I think it really comes down to the finding the right person through either past relationships or connecting somewhere, and then really working through that and understanding the risk profile, their desires, their commitment, their long-term goals. So again, it's similar to dating. You mentioned getting married, and actually there's no divorcing at all, because it's you're together, and I suspect that if things go bad, and fortunately for us it's not, but I haven't. I've seen a couple organizations where the partners just really struggled, and it actually got to the point where it ruined the company, because there's no, especially when you're small, and there's even if you're 10-20 million dollars, it's just still to break that apart at certain times is very difficult.
So transitioning a little bit, I know you've mentioned going through several rounds of funding, right? Getting seed funding. And there's a question that comes up quite often. What's more important, access to capital or access to people? And sometimes it seems like it's the same thing, because you want the people who have the capital. But is it human capital? Is it financial? Does it depend on the stage of the business?
Yes. So there you go.
Question.
Yeah. So let's just talk about that and talk about the stages real quick. And so initially, when Kurt and I started, it was just the two of us, and we hired one other person to come in, help us put some marketing stuff together, and she's still with us, and we really went out and tried to get as much traction. And I did have some networking of people that I'd worked with before that were willing to put a little bit of money in. Early, we took as little as we possibly needed, just to get started, to get a website up, get our stuff, that type of thing, and so access a little bit of network, having some friends and family was helpful. But then as we started to build the business model, looking, okay, now we want to grow. Here's the people we need to hire and bring on. Identifying those people and what their skills were was important. But in reality, you can't hire them unless you have the money, because most of the people that are out there in the workplace aren't willing to come to work for half their pay for a year, or 18 months. Now, once you get a little more traction, so now where we're at, we can hire people, and maybe not. We can offer some options. There's some things you can do with equity. If you want to keep the salaries down, there's some trade-offs, and there's definitely people with that flexibility, and there's the ability to do that. But I think, so now, we're positive operating cash flow. You've got the funding. You can hire a certain number of people. Now it's more about how fast do you want to accelerate? How fast do you want to go? So instead of hiring 3 salespeople over the next 6 months, you want to go hire 10. And if you want to do that, then what else do you need, and what other structure? And so now you go out and raise some money, but the question really comes: if you raise that money, everybody's diluted, and then now you're starting over to actually create a new valuation. So you basically are creating another 3 to 5 year plan. So those are the interest. And maybe one thing we haven't talked about is creating an advisory board or a board of directors. is really important to be able to do that early on. That people that you can trust to help you through those decisions that actually have a little bit of a vested interest, but not a lot. It might be somebody that did invest, but somebody that didn't invest that has the skills, that's willing to coach and advise, outside, somebody that's not in your business on a daily basis. I think that's another area, going back to recommendation, to create, and it doesn't have to be an official board of directors. It could be an advisory board with technical, sales, finance, raising money. If you can find those people.
So
that are
that's your
willing to
human
coach.
capital that we were talking about.
Yes. So
you
if you
need that mental capital that you can really tap into, just like
Sure.
you need fiscal capital to tap into.
Yeah, and then in order to get the human capital that actually is going to operate and execute. So
You're thinking of human capital as your employee.
I was, yes.
Okay,
Yeah,
gotcha.
yeah.
Okay, yeah.
I wasn't necessarily looking at the human capital as the advisors out there. So
The big brains that you get to access.
yeah, and I think going all the way back, that's where the Minnesota Cup was a very valuable process for us, because there's the mentors in that organization are just superb, and they have a passion for helping entrepreneurs and helping companies, and they're going to put you through a process. And there's some other competitions out there that will actually force you, and they'll coach you, and there's no cost, and it's basically going to take your time and effort, but I would highly, that's a great human capital resource, those types of activities, and also all the other entrepreneurial groups that you're representing here, that you're pulling together. There's great opportunities to just go to them and yeah. So if you mean human capital there, I would say that definitely the human capital should come before the financial, because they will help you get the right business plan and the right structure, and they will advise you to actually bring the money in properly.
So something that we run up against when we're trying to help entrepreneurs starting off is helping set expectations. Expectations for, how do you get your first customer? How long is it before you can expect to hit a break-even point? And as you mentioned, you get to a new round and valuations change, so break-even becomes a moving target,
Sure.
right? But can you tell us about how you figured out how to get your first customer and how it went from there?
Yeah. So we were, as you mentioned, we were looking at this for a year before we launched the company, and so we actually had relationships with channels and partners. So we were already working closely with Verizon, and so had the opportunity to take our product to the channel and say, all right, working with 2 or 3 people, say, if we bring this to market, what do you think? And they were excited about it. I said, let's go test it. So finding identifying your sales channel is an important part of helping you do that. It probably, we were at revenue pretty quick. But when I say that, I think in 2013, we started in February, probably launched our product in August, and we did, 80,000 of revenue or something that year, but.
Isn't that pretty, that's pretty astounding, not typical, right, for a tech company?
Especially hardware, I think,
Mm-hmm.
Software, depending on how you're building it out. Again, we, and you think about this, when you're doing a startup, you're not, there are some startups that just come out with technology that's never been developed, especially in the medical space. They're working 3, 5, 6, 10 years on this. With a tech company and there's a lot of opportunities to make technology better, add value to the technology, do something unique to it. And that's really where we are. We took a base technology that was already created and developed, and then we actually identified customer pain points that they couldn't use the technology the way it was being developed. And we added value to that technology to make it easier and make it nimble. And so we nimbly linked the different technologies together, disparate technologies, to actually make it easier for a customer to get into the IoT space.
So is that how you iterate your product line, is looking at what are those new technologies coming out and what are the pain points for customers to use them?
Yeah, so if you look under, if you go on our website and look under Nimbelink, it says smart, simple, cellular. So we're always focused on cellular technology, and we've zeroed in. Now there's all other types of different technologies out there that could be used for the our low power and our connectivity, and we're trying to make it simple so customers can simply connect to it and get it used fast. And so that's really, as we look at identifying what are the pain points for a customer to get connected to cellular in the industrial space and construction space and the various industries that we're focused on, and then what is the best technology that we could bring to bear to do that, who are those technology partners, and that's really drives our roadmap of and what are they looking to do. And then once we got into the cellular, we have to 3G and 4G and different categories of speeds, and depending on which vertical we're going into, we're creating products, and we're doing a line of asset tracking solutions also. And so we basically are looking at what's the supply chain looking for, what do they want to track, indoors and outdoors without power, where was a gap in the technology and what was being offered in the marketplace. And we identified that gap of there wasn't a real robust product that actually could be slapped onto at the pallet level and track things going across the United States and going in and out of buildings. And so that's the technology we've created and trying to make that simple for the customers. So that's, we're trying to bring these technologies together. We're not creating the silicon, we're not creating the chipsets. We're taking the technology, bringing it together with a combination of hardware and software and making it easier to use. So that allows that.
Yeah, my brain is going through all the different applications. I'm thinking about tracking, every time somebody moves, tracking your household goods from one place to another, as that's probably all you have in the world, and you've put it on a moving truck and you're trying to figure out if it's going to make it to the other destination.
Yeah, I've been through that. I've lost a couch. Can you imagine, how do you lose a couch in a move?
I've lost so many things, you have no idea.
And I mean, I was there when they put it on the truck.
Right.
And a month later, when they delivered it to my house, I was there. Mm-hmm. And somewhere in that process, a very large couch got lost.
And so if I understand some of your technology correctly, you could create something where I could track my shipment from one end to the other.
Correct. Yeah.
Under a visual or under some kind of tracking system.
Yeah, and that and that's that's definitely could track it. We actually can track temperature also for those more perishable goods. You can track something if it's moving and it's not supposed to moving with an accelerometer. So there's that basic tracking and different ways of locating it using GPS and Wi-Fi and cellular triangulation. And then our different there's a lot of there's competition, there's products out there, there's solutions, and what we're doing is using the latest cellular technology on LTE-M, which is kind of at the early stages of the 5G, and it's really low power, so we can create a simple little asset tracker that has 4 AA batteries, and you could put it on something and wake it up 2 times a day, and it'll last 6-7 years on those 4 AA batteries. So if you want to be there's a lot of assets that stay out in the field a long time, and they move around, and customers want it. The OEMs want to know where they are. If they're large toolboxes, if there's large equipment that's out on a construction job site, things moving from one place to another. So yeah, that's another area of our focus. Which is,
So Scott, I understand that you're more B2B, right? You're selling to businesses that are tracking these things. And it seems like in this time of COVID that it's really the businesses that are doing a lot of shipping that are doing quite well, as opposed to maybe a downtown business kind of environment. So I'm wondering, does that translate into a positive impact for your business in this season? Or how are you finding yourself impacted by the COVID season?
yeah, so it's we haven't had a big spike, but we haven't had a big decline. So it's been kind of steady as it goes. We're very diverse. We're putting cellular modems in kiosks and drones and then tractors and trucks, and so there's a lot of we're very diverse. But we do work with a lot of earlier stage companies that were launching products, because we serve that long tail of the customers that buy lower volumes in some cases. So there's been a mix of little hesitation. Maybe we won't launch our product right now. So definitely a little slowdown we saw in April, May, June. We're actually starting to see confidence level come up in customers where they're saying, "Hey, looks like it might never be over. Let's just get back to business." And they're starting to launch their products again. We're starting to see that pick up. But yeah, for us, we were fortunate. Like you said, we weren't in the hospitality and the retail, and so we were fortunate to kind of make it kind of go through that, and we're starting to see a little uptick coming into the fourth quarter. So we dipped a little bit here in the third quarter. Just overall, people just slowing down what they were buying and
Right.
tightening up the supply chain.
So you kind of alluded to this idea that you maybe have something that's coming next. Can you tell us a little bit about what's next for your company?
Yeah, so two things. As we look at this in the asset tracking space, we're driving to make it as small as we can and still make it robust. So we actually have a product coming out that actually will fit between the slots of a pallet, and it'll actually be able to be screwed down onto the pallet, and then it'll actually have the ability to communicate with Bluetooth tags on other pallets, or even on the same pallet. So if somebody wants to do temperature or humidity or something by the package level, or they want to know if that package is still attached to the pallet, we'll be able to get down to that level of tracking with this particular solution, which is very exciting. We see the market continuing, as you mentioned, supply chain. People want to know where their stuff is. They want to know when they're going to get it, and so we're excited about that launch here this fall. And then we're starting to do more with we have our modem. We're actually doing more with the access of the processor, letting our customers, which are mostly engineers and development teams, create their whole application in our Skywire modem that we sell. And so from a technology point of view, that's pretty exciting. So we have and then we're doing a little more with bundling data plans into our sales. So for a one-time cost, customer can buy our cellular modem and have data, a certain amount of data to use over the next 5-7 years. So they don't have a recurring monthly charge. So we've got some differentiations in the business models that we're trying to drive.
So when you say customer, that's like a Verizon Wireless as a
Nope.
customer?
Nope. A customer is more like an OEM. If you could think about any company out there, like I'm trying to think which ones I can talk about. So Verizon gets us into the market, and we sell their data line. So you think of there's Coney, the elevator operator, has toolboxes that we track. We can talk about that. We talk about Um, I'm just not sure which customers I can name, so, we don't
That's
talk about
okay. I
customers a
was
lot.
trying to
Yeah.
understand the
But think
customers
about,
and like
yeah, a
the
customer is
product.
somebody that builds a product, like somebody that's building a generator, and an OEM, because they sell business to business, that builds a generator, and they want to integrate cellular technology inside their generator so they can actually know if it's running, know if it's running out of gas, all the conditions of it. So think about anybody that creates a product, a tractor, a generator, a kiosk, a drone, those types of, oil and gas pumps, those types. All of those people are potential, are our customers that integrate our technology. And then from a tracking perspective, you think about any of the large OEMs that build things and want to move things from point A to point B and track them, a Boeing or something like that.
Cool. So as we're coming towards the close of our time together, I'm curious, you mentioned MinCup and you mentioned some things like that. How can the Minnesota ecosystem get better at supporting entrepreneurs? What's missing? What needs to be added in? Or is it good as it is?
Well, I think it's a lot better today than it was 7 years ago. I think there's a lot more collaboration. I think, the Minnesota launch is very exciting. Mindy's done a great job pulling things together. You got, entrepreneurial kickoffs. You've got the Kabara Institute, which is behind you there. There's different, there you go. We've got, the Collider group here in Rochester. So, I mean, these are all really, I mean, not all of them, but a good chunk of them have been created in the last 4 or 5 years have evolved. You've got the various boot camps going on in the Minneapolis area, lots of competitions, so I think there's a lot going on. Again, I think there's been a good initiative now to start helping people understand that these resources are available. I think that needs to continue. And I think it's reaching out into, into students and college level. If I think about what could they do better, I think that continued awareness, just saying, hey, we're here, trying to take away the fear of, hey, we're not trying to steal your business idea. We're not trying to steal your company from you. I mean, I think those are the initial kind of fears I hear or see. Is like, well, if I work with them, what are they going to do? What do they want?
Right.
And there is some, there are groups out there that want things, but I think educating from that perspective is very helpful. Obviously during this COVID time, it's hard to network. It's hard to get that face-to-face stuff going on, but we've got to figure out a way to do that, and figure out a way to support. There's probably I think some of the larger organizations are now allowing startups to come in, and I know in the food space, Land O'Lakes getting involved and stuff, but I think Minnesota's got a lot of corporate, and really how do we actually get access to some of those corporate companies a little easier from a business development, from selling them, not looking for money, but how do we actually get our products in front of them? How do you get entrepreneurs in front of, how can the startup community and the community that's helping the startups make that connection to come in and talk about the product, talk about selling the product. Not, I don't want money from you. I want you to, I want to show you my product to see if you want to buy it.
Right.
And I don't know I haven't seen a lot of that going on, that business development. I see corporate development saying, hey, you should invest, but instead saying, hey, could you use this product, or does this solve a problem? If not, what problem do you need solved?
Yeah. So we had originally actually intended to have a fall expo where we could connect local entrepreneurs with some of the more established companies, theoretically, to do just those types of things. in a COVID era, that's a little bit more challenging, but we
Sure.
are working on it. But yes, I
Yeah.
agree with you. I think that's a gap in the market right now.
Yeah, I could see that as being very helpful because as we talked earlier, getting a sale or getting a customer is very, very important. And it proves out that you've got a product, it proves out that you've got something that the market might, the market needs or desires. So that's a key point. 'Cause if, you could be in the biggest market in the world and have the greatest people in the world and have a bunch of money, but if you don't have a solution, that solves a problem. So I mean, identifying what that problem is,
Yeah.
and then creating that solution that solves it is what business is all about. So it's having money and people and all that stuff. If there's no problem, then you might as well just stay home. And
Right.
and then if you've identified the problem correctly and you got the right solution, all the other stuff should come together.
Well, that's probably a really wise remark to end on. So find a problem and then create the solution for the problem, and then everything else will kind of fall
Because
into
I've
place.
tried to create a solution to solve a problem that wasn't there, and I
Yeah.
guarantee it's a money loser.
Yeah. Well, yeah. And somehow that makes sense when you're stepping back and not so much when you're in the middle of it sometimes. But
Right.
thank you so much for your time today, Scott. I am
Yeah,
truly
thank you.
grateful for you sharing this knowledge and having a very frank conversation about what your business was like and starting and getting going and where it is today. And so I really appreciate that. Thank you.
All right, thank you for having me.